Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 5 o'clock in New York. It is Thursday, 9th day of January, 2020, and this is the Daily Report for gold and silver. Although gold continues to drift lower, my sense is that we are quickly approaching a level of support in which traders can once again refocus on the key elements that drove gold higher over the last half a year, and that primarily has to do with central bank action. On today's show, I want to take a look at current levels of potential support and look at what we think will happen next in gold pricing. But first, let's take a look at the price board. As you can see, gold has drifted a little bit lower, down $6.70, with February futures currently fixed at $1,553.50. Tomorrow's jobs report, I think, will really define whether or not we will see gold continue to fall or find some support in this area. Silver also closed lower on the day, down 25 cents. But as you can see, it sold off in terms of a percentage drawdown, almost 3-to-1 to what we saw gold lose today, down 1.4%, under $18 at $17.91.5. Platinum did rise today about 0.8%, 971.80, and palladium continues its incredible climb, gaining about $12 today at $2,073. And all of the precious metals being influenced by a stronger dollar, providing some headwinds. Dollar up 16 points at 97.16. Let's take a look at our charts. We are looking at a daily candlestick chart, this of the continuous contract of gold, referencing the February contract. As you can see, the last 4 trading days have been unique in that we have seen extended highs. This went up to $1,613. That, of course, occurred yesterday, down to today's low. And today's low, of course, came in at $1,541. We haven't seen it trade this low for quite some time. Now, my sense is that now that we are normalizing, we will begin to refocus on the primary reasons that gold has been moving up in the first place. And in terms of places we want to look at, I've put up a basic Fibonacci retracement, this being a short term of this last leg of the move, what I'm labeling as a wave 5, and it is in essence from $1,449 to $1,613, so about $150, $170. We can see that the 50% retracement comes in at $1,531, and just above that is the 38% retracement, which comes in at $1,551.40. We can also note that the market closed just above that today at $1,553.50, and so those are the two real areas that we want to focus on as potential levels of support. Now, tomorrow, we will have the U.S. Labor Department's jobs report, and that's where I think we'll see how this needle moves as to whether or not 1551 or 1531 will provide an area of potential support. Because my sense is that this sell-off that we got once there was a resolution to the Iran-United States conflict, traders will once again begin to focus on the primary issues that cause gold to really begin to move up. Realize that when we take a longer term look at gold pricing, we can see that back in May of last year is really when we hit the bottom at 1265. We had that ascent up to 1565. We had the retracement to about 1450, and then the last leg of this move. So we have seen gold really climb extensively over the last year, and I think we could see more of that ahead. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.